Outside bars are basically the killer bars for traders. It means that the market took out one side of the previous daily bar, looked like it was going to initiate a continuation move or a reversal move, and that intraday the market then reversed itself, which basically means that unless you have a very clear directional bias, whatever you do is going to be wrong. So outside bars are the bane of traders' existence. The next chart we're going to is chart number 9, and here we start to look at the Danielcode. And what the Danielcode does is it creates a series of numbers or price levels. They're quite dynamic. They're created from the price structures within the chart. And in this case, you'll see that we have a series of blue lines. Now, the Danielcode, in fact, creates an infinite sequence, and it creates sequences from all market structures. All markets turn at Danielcode numbers. Now, that's just a fact. Very few people know it, but that's just a fact. The limitation to that is that, in a practical sense, you can't put every possible sequence on the chart. There are just too many sequences. Fortunately for us, markets tend to use the same sequences all the time. So the Danielcode number sequences that I put on the charts at the Danielcode website for you are the most common sequences. Do we miss some? Yes, we do. Occasionally markets will turn at a very minor sequence. We can always find it in hindsight. We can't always put them all on the chart beforehand. A computer could read them, a person probably not. But fortunately, of the most commonly used sequences that I provide on the chart, at least possibly better than 85% of all market turns are made at those numbers. Now, what the Danielcode tells us is that its number sequence controls all markets in all time frames. It doesn't tell us anything else. It's not a directional indicator. It doesn't tell us what the reaction is going to be. Some turns at Danielcode numbers are just one day, some of them even less. They can just be a one day or a part of a day counter trend. Other turns at exactly the same number on the same signals will give you a complete major change of trend. So we don't know, we don't understand yet what the quality of the turns is going to be, but we do know that all market turns in all markets, we cover Forex, gold, oil, wheat, grains, bonds, S&P, Dow, DAX, Russell, you name it, we cover it. All turns come at the Danielcode numbers. So if you don't have access to the Danielcode numbers, you're going to start off a long way behind the 8 ball. So we look now at this chart 9 and we see that we've created on this chart a Danielcode sequence. This is the first sequence that goes on the chart. This is likely the dominant sequence. And you'll see that there's a series of 1, 2, 3, 4, 5, 6 numbers on that chart. And at this stage we don't know which one of them is going to turn the market. The next chart, moving on to chart 9A, is the second blue Danielcode sequence. And you'll see now we still have the original Danielcode sequence with the numbers on the right hand side of the chart, and we've now added the second or alternate sequence on the left hand side of the chart. The numbers on the left are just another Danielcode sequence. It's the next dominant sequence that I can identify. Markets will often bounce between sequences, particularly when there's not high momentum. It's very common to see a market stop and recognize one of the Danielcode numbers from one sequence and the next day switch to another sequence. So what markets will do with these numbers is they will recognize first. They will stop at or very close to these numbers, and we call that the variance of recognition. So typically we get this simply from observation. We expect in the S&P and the Dow that the market, the high or low at the Danielcode number, if it's recognizing that market, will be within 0.025%. That's about 3 points in the S&P, 30 points in the Dow, 20 or 30 ticks in Forex, although we do allow up to 40, and each of these markets have their own variance. But you'll see in practice that even though I give you those variances, the vast majority of the recognitions by the market are very, very much more precise. It's not uncommon at all to see these markets recognise the Danielcode numbers within ticks. You will recall, if you read the articles in Financial Sense or the articles which are also published at the Danielcode website, that the Danielcode picked the March high in gold to 2 ticks. It picked the March low in the US dollar to within 2 ticks, not points, ticks. And it did that in a published article 6 weeks before it reached that low. We've had this year rather so far, we've had, as I say, the highs in silver, the lows in the US dollar, we've had the high in oil, we've had the high in rice, we've had almost all the markets we cover. The Danielcode's identified major turning points, and you need to know this information. So we'll now, just moving on to the chart 9A, and you'll see that I've now added 6 arrows onto those price bars.